Hey mortgage friends, quick one for you today. Two trends we're seeing a lot of going on in correspondent lending, and both of them can hit you pretty hard at the state level. So first, mortgage call reports. Something that's catching people off guard. If you don't know what business activities you're showing on your MU1, you need to look. If you have lending activity identified anywhere in that footprint in your MU1, and any state, it doesn't have to be all states, in any state, even if you're not actively doing correspondent lending, even if you're not pursuing it, you don't have the capability, maybe you don't have a warehouse line, having the activity listed in your MU1 is enough to trigger the expanded call report. And that's each and every quarter. Expanded means more than just loan data. It means that you have to do the financial condition report alongside your MCRs every single quarter. And here's where it gets a little bit more sensitive. States are starting to watch much more closely for companies filing zeros just to make the deadline and avoid any late fees or penalties, and then going back and circling back weeks later to fill in the actual numbers from the financials. Your takeaway here, check to make sure you understand what your MCR obligations are against what you're actually filing in your business activities, not just what you're actively doing today. If you're required to file the expanded report, make sure to have your quarterly financials prepared timely. And a pro tip for you, before you file anything related to your financials, ensure that they meet or exceed your minimum net worth standards for any of the states where you're licensed. Okay, second trend, and this one hits a lot bigger. We're starting to see license type mismatches with the way that people are conducting their business. We had multiple companies in just the last 5 to 7 months come to us after realizing that they had funded loans in states where they only held a broker license. Not a lender or correspondent license, a broker license. The states aren't treating this simply as a paperwork issue. They're treating it as unlicensed activity because the actual work that was performed and the activity that was exercised here was not authorized under the license type that they held. Important. Do not rely on your lender partners or warehouse banks to ensure that you don't accidentally fund something that you should have brokered. They do an awful lot for you, but that's not one of the checks and balances that seems to be in place at most lenders or warehouse banks. So to wrap things up, just want to remind everyone that the reason that MSource is here is to help you. If you have questions, concerns, would like help with your filings or your reports, or just somebody to double check to make sure you have the right processes established to keep you compliant, please reach out. Thank you all. Have an amazing day.